But the one thing that gives me pause is you've talked about Bitcoin is going to become the global reserve currency. I don't think that governments go down without a fight.
Yeah, so global reserve currency, first of all, is like a term that everyone talks about, but what is a global reserve currency, right? There's two ways to look at this. One is the legacy terminology of global reserve currency, which is the most dominant military basically puts the currency, in place and then enforces that across the world. The dollar is, a pretty good way to use that as an example. Every economy has a reserve asset. The U.S. economy is based on the U.S. geographic players, right? People within the U.S. Geography. And the reserve asset is the U.S. dollar. If you go to Mexico, the Mexican economy has a reserve asset, the peso, etc. And you go through the world, this is true. There's an economy, though, that has been created. It's actually the largest economy in the world, and it doesn't have a reserve asset. It's the internet. The digital economy does not care about where you physically are. Geography does not matter. It's unhinged from the geography. What's the reserve asset of the digital economy? Well, most people would say, well, I use dollars, right? That seems to be one of the more popular ones. But that's because we live in the developed Western world. People on the internet in India don't use dollars, right? They use their local currency. And you go around the world and you see this. What happens if we all just used one currency and all the units were the same? Okay, that'd be interesting. And so the reason why I say that it is going to be a global reserve currency is I actually don't think it's nearly as competitive with the fiat currencies as people think it is. Because ultimately what happens is the digital store of value, I want to protect my assets. And so what we're moving towards is a multi-currency world, right? Right now, you and I live in a single currency world. You get paid in dollars, save in dollars, invest in dollars, and then you also pay taxes in dollars. If you want to go to somebody else's single currency world, Mexico, you have to convert your dollars to pesos to operate within the Mexican economy for the most part. Well, when you make that conversion, it's actually very difficult. You go to the bank and you try to withdraw it. It's got to be large sums. Or you go to like a currency exchanger at the airport, they rip you off, right? Like it sucks. What happens if all of a sudden the friction and the cost of transacting between currencies or the switching cost goes to zero? And now I get paid in dollars, and with a click of a button, I can change my dollars into pesos or into Bitcoin or into a digital euro, etc. Well, now the technology is the exact same. The only difference, the only competition between the currencies is at the monetary policy standpoint. They're all digital currencies. So the digital dollar, the digital peso, and Bitcoin are literally all the same technology-wise in that steady state. But there's competition at the top layer, at the monetary policy layer.
What is monetary policy?
All fiat currencies have the same monetary policy on a structure standpoint. They're all inflationary currencies, meaning that there's constantly more printed of it. It's got a variable monetary policy, meaning that it constantly changes. Sometimes they're expanding, sometimes they're contracting. But the reason why the dollar is guaranteed to lose value is because they have to continue to create more of it, right? Same with the peso, same with the euro, etc. So if you actually take all the fiat currencies and you put them in a bucket, there is a non-consensus or a different currency structure, which is Bitcoin, for example. And so if it ends up being right, it's going to be wildly valuable. It's non-consensus and right. But two is, if I'm looking to store value, if I'm trying to save, I'm not going to save in the fiat structure, regardless of the currency. It doesn't matter, dollars, euros, yen, whatever. I'm going to put it into an asset where it protects my purchasing power. And if the switching cost is zero, I now can switch back and forth very easily. So you can see a world where my employer pays me in dollars, it auto converts into Bitcoin, I sit it there, and then I got to pay my taxes in dollars. I convert back into dollars and I pay. Well, I'm saving in Bitcoin. I'm storing value in Bitcoin. What do people do? Well, historically, maybe I had to buy real estate to do that. So my employer paid me in dollars. I took the dollars, I converted it into real estate. I sat there, and then all of a sudden I needed money to pay my taxes. I could sell the real estate, get it, and pay it back. Now that's a ridiculous, order of events if I'm simply going to use it as a saving mechanism to then pay my taxes, later this year, because there's cost, there's time lapse, etc. But there's no difference between doing that with real estate or doing it with Bitcoin. It's just now all of a sudden I can do it instantaneously. I can do it with a digital asset that protects my purchasing power, and the switching cost is zero essentially. And so when we move to a multi-currency world, actually in some crazy way, the fiat currencies may become more valuable. And this is, not everyone agrees with this.
I was going to say, I'm so intrigued.
It's like the restaurant problem, right? If I put a restaurant on a intersection, it's the only restaurant. It gets, let's say, 10 people a day. If I put a restaurant across the street, many times people will say, oh, that's competition. Now that first restaurant's going to suffer. If I put a third one there, people say, oh my God, that first one's screwed. A fourth one, oh my God, the first one is out of business. In reality, what happens is all the studies show when you build density at the intersection, everyone actually gets more traffic because that becomes known as restaurant intersection. That's where all the restaurants are.
Yep.
I'm hungry. I don't know. Let's just go down there. We'll figure something out. And so actually the first one benefits from having the others move in there. There's two arguments when it comes to Bitcoin and the fiat currencies. One is that they're in direct competition with each other. Bitcoin wins, fiat currencies lose, game over, right? And in that scenario, governments absolutely do not want this to happen. The governments that embrace the technology that ends up being the winner first will drastically outperform those that are last to adopt it, right? The second one is this argument of, no, actually, a multi-currency world, all boats rise together. Now, I talked earlier about I don't want to be a market predictor. What I find right now is as technologies are being digitized, it actually increases the accessibility of them for people around the world. So take that second example. I'm in Venezuela. The Bolivar ends up getting devalued away. I know I got to get out. Really, really hard for me to get dollars. I can try it through the bank, but there's limitations. I'm worried about confiscation by the government, etc. The black market is really pricey in terms of it could cost me a lot to actually go buy it, and it can actually be physically dangerous. So why do I want dollars? Well, there's safety in the dollar in my mind. There's stability. That's the best currency. My currency sucks. This one's great. Let me go buy this one. Okay, dollars are hard to get. I'll get gold. Well, hard to find, can be physically dangerous, could be confiscated, etc. Okay, well, what can I do on the internet? If all of a sudden I think, let's say Bitcoin's too volatile for me, I want dollars, but the dollar isn't digitized on these platforms, but China takes their currency and they create a digital currency. It's better than nothing. So what do? I buy the digital currency of China. And it's just a pure accessibility thing. So I think ultimately the incentive is that everything will be digitized, right? You'll get digital dollars, digital euro, yen, etc. And some of that will be because people believe that there's some sort of internal domestic advantage to it. But also some of it's going to be just simply the game theory of we have to digitize our currency so it's accessible to people around the world. And so we can drive more adoption, more value. But the second that everyone has digital wallets, everything becomes a currency, right? How many people say to themselves, oh, I own that piece of real estate. I need to sell it to get dollars to then go buy something. Well, what happens when I can just take the real estate and buy directly the asset? I don't have to go to the common unit of account of $1. All the technology is the same. The value just is different. And so you get in this really weird world where, like, I don't know what's going to happen in the future, but you can clearly articulate 2 or 3 different versions. And in every single one of those versions, Bitcoin specifically is valuable. So Bitcoin is valuable if it goes head to head with the fiat currencies. Bitcoin is valuable if the fiat currencies benefit, and all currencies end up accruing more. And Bitcoin is valuable if all of a sudden every asset is a currency and you can interchange them freely. So from my standpoint, it was actually the least risky thing I could do personally was to buy Bitcoin. And I always say that I sit at the intersection of 2 very, very different worlds. When I talk to, friends on Wall Street or these large asset managers and stuff, they're like, you are insane having 95% of your net worth in this thing. And I say, sure, but I think you're insane for having 95% of your net worth in dollars or in dollar denominated assets, right? So we see eye to eye on insanity. It's just 2 different assets. If I go talk to particularly young people in crypto that are on the edges of innovation and really kind of pushing the pace of this new stuff, they're like, dude, you are the least risk tolerant person I've ever met. Like, you just hold boomer coin, right? Like, Bitcoin doesn't do anything. And so how can it be that the same asset viewed by the youngest, most kind of forward-thinking, innovative people is seen as the most conservative, but by the oldest, most successful is seen as the most risky? It's actually probably where you want to sit, right? Is because you're taking the two worlds and you're kind of meeting them in the middle. And so when you ask about like allocations and all this stuff, I always ask people, what are you optimizing for? I basically built a Venn diagram early on, and I said, okay, what is the thing that I think is most likely to be here 100 years from now, right? My plan is to hand Bitcoin to my grandkids. Okay, so it needs to be around for 100 years, the durability of it. And also, what is the thing that has a very attractive return compared to traditional assets? Bitcoin's compounded at 200% annually for a decade.
That's crazy.
Pretty crazy, right? So if it's durable and it has an attractive return compared to traditional assets, I'm going to go get a lot of that. And if I denominate my net worth in it and my life, like my financial life in it, it actually changes psychologically spending money. Because it's one thing if I say, hey, you're going to go spend a depreciating asset to buy a house or buy a car or buy whatever.
Might as well. It's going down in value anyway.
You're financially incentivized to do it, right? It's literally, it's going to lose value, so you better get rid of it. If I say to you, hey, you're going to buy something with an appreciating asset that is likely to be worth more in the future than it is today. Now, so you think to yourself, well, what am I buying? Do I need it? Is it an investment? Is it going to be worth more than what this is going to be worth? You start to ask yourself some of the questions you might not have otherwise asked. And so it's one of these things where like, I've basically just thrown my hands up and I said, look, the world is changing at a rapid pace. I spend all day on this stuff and I can't keep up. It will look very different 25 years from now than it does today. And how lucky are we that we get to live here, that we're talking about it, that we see the opportunities. And you know what? You and I will make a bunch of investment decisions. Some of them will work, some of them won't. My guess is that by picking the right industry that has a massive tailwind behind it, we would have to be really, 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 really stupid and then make really, really, really stupid decisions. We probably still will be okay. Because it's like saying, oh, I invested in the internet in the 90s. I mean, you had to be an absolute idiot to not somehow, somewhere end up better off after investing in the internet than before. I think the same thing's true here. So, you can make optimizations, all that. But at the end of the day, anyone who's paying attention to this stuff, I think is going to be fine.